Rockwell Automation hitting an all-time high after better than expected sales growth for fiscal 2026. Earnings and revenue also came in higher than expectations. Rockwell also saying it is dissolving its joint venture with SLB. Joining us now exclusively is Rockwell Automation Chairman and CEO Blake Moret. Blake, it's great to have you back on the program. Welcome.
Great to be here.
You know, Wall Street really seeming to hone in on your guidance for 2026. What does it signal, both about the company and about the broader state of manufacturing?
Well, as a U.S. company, there's obviously a lot of excitement about manufacturing in the U.S., and we're the leader in automation and digital transformation. So I think that's driving a lot of the excitement, as well as specific to Rockwell, the ability to put together expanding margins with a return to full-year top-line growth.
Are you starting to see this show up in terms of orders and future business for Rockwell, this idea of reindustrialization, reshoring, and CapEx actually finally being deployed after a lot of uncertainty earlier this year?
So we're seeing growth in particularly our product businesses. It's a little bit more focused on brownfield, so expansions and modernizations of existing facilities. I think trade uncertainty is still suppressing some of the larger CapEx spend. We see some of it, but it's not coming out from all industries. And I think a little bit more stability in markets, especially around trade, will help unlock that.
When we talk about factories of the future and automation and the promise of AI, I mean, you're on the forefront of this. Are we at an inflection point with the technology and the capabilities?
I think we are. We see it in our own internal operations as we help our employees be more efficient with the tools, whether it's coding or whether it's in back office functions. But also for customers, I see the primary opportunity to simplify the whole business of automation, whether it's simulation of processes or it's scheduling or maintenance. AI is already having an effect.
You know, it's interesting because the Tesla shareholder meeting is going on right now, too, and there's a lot of focus on the future of that company and the role that robotics and things like humanoid robots are going to play at that company. How are you thinking about the potential for robotics? Do you see Tesla as a future competitor, or do you see this marketplace evolving?
I see it evolving. We got into mobile robots a couple years ago to complement the fixed automation that we're well known for. And the idea, again, is to simplify on the factory floor the mobility, the mobile robots interacting with the line process control, all in a single cohesive system. I think, humanoids may have a role in some applications, but I see it as a little bit of overkill for a lot of the applications in factories today.
Looking across your end users, where are you seeing the most growth or the most strength as we look to 2026?
So certainly in the area of e-commerce and warehouse automation, we're seeing probably the strongest year-over-year growth. We did see in the fourth quarter automobile manufacturing, and that's both from some new projects, but also for the very large installed base that we service, pharmaceuticals, and certainly there have been some high-profile announcements of U.S. manufacturing plants, but we're also supplying equipment and software to those companies around the world, and then food and beverage, which is our single largest served industry.